is Sarah Seibeck, and I'm an associate editor with Workforce Magazine. I'm joined today by Don Garlitz, who is a senior vice president at Bswift. Don, how are you today?
I'm very well, thank you.
Wonderful. Well, thank you so much for being with us. Today, we are talking about the fact that we're about a year out from the 60-55, 60-56 annual reporting requirements going into effect. So my first question to you is, what does the 60-55, 60-56 reporting require of employers, and who's responsible for doing it?
Great, thank you. Let me just quickly tie two ideas together. Sections 60, 55, and 56 are sections of law that were passed in the ACA, and what they create is the requirement for employers and other entities to give reports to taxpayers for a variety of reasons. So the tax forms that have been created to comply with these sections of the law are forms 1094 and 1095. So I think through today's presentation I'll more refer to forms 1094 and 1095 as opposed to 6055 and 6056, but it's kind of the same stuff. But the bottom line is employers have an obligation to let their employees know if they had adequate and affordable coverage available to them through work. Some employers, not all employers, and I'll talk about that in a moment. And then the purpose of these forms come into the taxpayer so that taxpayer in part can prove to the government when they file their individual tax returns that they had coverage during the year. And if they did not have coverage during the year, then they may have to pay some penalties on their taxes. So that's the whole idea here. It's really about creating the tax forms to help individuals prove under the individual mandate that they had coverage, and also employers to prove under the employer mandate that they offered affordable and adequate coverage if they were required to do that. So what I might do is refer to a chart that we've created. It's sort of a flow chart, and it breaks down really from small employers to what are called applicable large employers. Applicable large employers are those that have 51 or more full-time equivalents. And on this chart that we've created, we basically show a flow of which forms that employers need to prepare and issue, and to which classes of employees. And what drives the form that the employer needs to give to the employee depends on things like was that individual a full-time equivalent? How large is the employer? How many full-time equivalent employees do they have? Was coverage available through work? And was that coverage adequate? Really, did it meet all the requirements of the ACA in terms of coverage quality? And then there's questions around, was the coverage fully insured or self-insured by the employer? And did individuals enroll in the plan or not? Sometimes that determines whether there's a form that needs to go to the individual. And frankly, it can get a little bit complicated. So what we tried to do in this flow chart is break it down so that you can kind of follow line by line down, depending on the type of employer that you are and what type of plan that you offer, to see which classes of people you need to give a form to and which form you should give to those folks. So on this chart, we're illustrating that there's some cases where the employer does not need to give a form at all to people. That's generally smaller employers. But on the flow chart, you can see that there is a particular class of small employer. If they're self-insured, they do need to give a form 1095B to those employees that are covered, but not to employees that are not covered. On the other hand, if you're an applicable large employer, you basically always have a reporting requirement to your full-time employees. Even if you have no health plan, you have to give a form to your people. Mm-hmm. But the question is, it's going to be a Form 1095C, but Form 1095C has certain sections that don't have to be completed under certain circumstances. So not to dive too far in the weeds for today's call, but the bottom line is there's different forms that the employer may need to prepare and issue to different classes of people, even if they have a unified plan. Hopefully that's can give the listeners some view into that it is a little bit complicated, but this is understandable stuff.
Wonderful, and I'm sure they will appreciate the flowchart. So now moving on, I was hoping we could talk a little bit about the top reporting challenges. So what are employers up against?
Well, one of the things that employers have to be able to do is figure out and determine who's full-time and who's not full-time. Now, for a lot of employers, that's very easy because they either have very straightforward breaks between who's full-time and who's part-time. But for those that have variable hour people, they need to track those folks and to determine who's full-time and who's not. So we have tools that kind of help folks with that. Once you know who's full-time and you have counts and you know whether you're an applicable large employer or not, then there is some challenge in all this reporting to determine whether your plan is affordable. Now, it seems pretty straightforward, what's the cost of the plan, especially if you're fully insured. But, sometimes for an employee, the cost of their plan may vary based on their job class, their family composition, even in some cases their age or their salary or whatever. So those things come into play. And then many employers these days have a wellness program. And in some cases, wellness programs offer credits for the insurance premium, so you can get your insurance premium lower if you follow the wellness program. And in most cases, those wellness credits cannot be taken into account when you're considering if the plan's affordable to an employee or not. Now, tobacco credits are okay, but most other wellness credits are not. So it can be a little complicated, and I guess my point is that employers need to be careful about calculating what they will put forward to the IRS as their lowest cost plan and take all these factors into consideration. So we house a lot of that information in systems like ours, and we're able to produce reports for employers that help them easily see what their lowest cost plans are for each of their classes of employee. Another thing that's important is the employer has to report on these forms to the employee every year. Number one, who was covered, not just the employee, but the employee's dependents, including children, and who was covered on a month-by-month basis. So I think my situation is a pretty good example. I have an adult child on my plan and also younger children on my plan. And so when I get that form every year, my employer is going to need to show me on my form the names of each of my children and which months of the year those children were covered on the plan. And there might be some months where, for example, my adult child may be on the plan for part of the year but not the rest of the year. Now, the part of the challenge with that for employers is that they may be thinking that they're going to rely upon someone like a payroll vendor to help them gather the information they need to create and publish these forms. And the problem is somebody like a payroll vendor doesn't really know this information generally. They may know that you're on a plan, and they may know that you're on a family plan even, but they're certainly not going to know the names of the dependents that you have on that plan and which dependents were covered on a month-to-month basis. So that's very granular coverage information that needs to come from a system such as ours.
Wonderful.
So hopefully those are some of the challenges, and we have some pretty good answers for those things.
Absolutely, absolutely. So you mentioned vendors. So if an employer is looking to partner with a vendor, what should they look for in terms of outside help?
Well, we think, of course, that the employers are going to be best served by systems that have a lot of this data already in their systems, mm-hmm. and that can produce reports automatically and run reports and things. So it's, I think, important to be working with somebody that has the key data in their hands already. And so that would be companies like ours, or often insurance companies. Insurance companies will have a lot of this granular coverage information month to month and know who's covered and all that. So they certainly have that capability too. We do think that it's important for the employer to have an audit trail. There are some sort of shortcuts you can take on at least one of these forms, where those shortcuts basically allow the employer to, instead of listing specific cost information on the form, they can click a box and just say, I attest that my plan was affordable. But even then, that employer needs to be able to have an audit trail to prove to the IRS that their plan was, if they got called and audited, right? So mm-hmm. so that whether they have to put the information on the form or not, they really need access to that information housed and stored somewhere on their behalf, and that's one of the things that we do. So those are important things, I think. And then there's also a question about, since we're in coming up on the very first year when this is going to be required, there may be some employers that aren't all the way there yet, and they may not have their solution in place. And so I think they would want to be looking for, some employers are going to be looking for a vendor that can do a mid-year implementation and take some data, some retroactive data from the first few months of the year, and bring that into the tool and allow them to do their reporting next January. And so I think those are, the ability to do a mid-year implementation with retroactive data, I think is going to be important to a lot of employers.
Wonderful. So, and we always like to talk about consequences. So what happens if these forms are filled out incorrectly?
Great question. Well, certainly, we all have obligations to turn in tax forms, and employers are no exception. For many, many years, employers have had the obligation to turn in, to produce and put out forms W-2.
Mm-hmm.
We're all familiar with the W-2 when we file our personal taxes, and then they have to file a form W-3, which is like sort of like a cover sheet describing all the W-2s that go in. Well, the ACA basically ties the penalties under Forms 1094 and 1095 to the same requirement as the W-2 and the W-3. So it's essentially the same consequence. Not filing Forms 1095, creating 1095 for your employees and filing your 1094 is the equivalent to not producing your W-2s and W-3s. And the amount of those penalties really can vary based on did you do this intentionally, how long were you out of compliance, how long did it take you to get back into compliance, and things like that. So the dollar amounts can really vary a lot, but they're not inconsequential. They're pretty substantial penalties.
Gotcha. All right, so finally I was hoping you could provide us with an overview of Form 1095.
Sure. So here we have another chart, hopefully that might be helpful to people listening to the program. So there's really we call three flavors of Form 1095. There's an A, a B, and a C. The Form A comes from the public exchange for an individual that buys their coverage there. So again, this is usually somebody that's getting a advanced premium tax credit to buy a coverage in the public exchange, like healthcare.gov or a state-based exchange. So in this case, the form comes from the actual exchange and tells the individual not only who was covered and what months those individuals were covered on the plan, but it also gives information about the tax credits that one received so that the taxpayer can reconcile that on their individual tax filing. And if they didn't get enough tax credit, they received some windfall on their taxes, and if they got too much tax credit, they kind of have to pay some of that back when they run their taxes in the spring. 1095B is a form that usually comes mostly from insurance companies. This is a form that basically describes who was covered. This is and only one exception. This is the only exception where employers have to file a 1095B is if you're a small employer, less than 50 people on your plan, and you're self-insured. Okay, in that case, there's not an insurance company because you're self-insured to file this form, but you're not required to put a 1095C, which is for large employers. So those employers will use a 1095B, but for the most part, taxpayers that get a 1095B will be getting those from insurance companies under fully insured plans. And one caveat is that Form 1095B, if you're covered in the public exchange where you get a 1095A, you will not also get a 1095B. You will only get the A. But the 1095B will come into play typically when you're not buying coverage in the public exchange, but it's fully insured. So 1095C is the form that comes from large employers. And again, if you have 50 or more full-time equivalents as an employer, then you got to put out a Form 1095C. Now you have to put this form out to everybody, as I mentioned before, all of your full-time people, not everybody. Your full-time people, not your part-time people, have to get a 1095C. But there's a section on 1095C, Part 3, as you can see on this chart, where the employer can put, if it's required, coverage information. And this would be applicable to employers that are self-insured. Okay, this is basically they created Part 3 of this form so that large employers who are self-insured, which is a large block of the population in this country, would not have to do a 1095C and a 1095B to prove coverage. So they basically took the B information and they put it in Section 3 of the C form, so that the employer only had to do one form, which makes a lot of sense, and I think will hopefully keep things simpler both for taxpayers and for employers. But that's a high-level overview of what these things are for, and we're excited about the tools that we're able to offer people, and we do think it's important to get engaged sooner than later on working with these tools and making sure that you got all the right data you'll need. The report doesn't have to go out until January, but because you're having to track and report this stuff on a month-to-month basis, if you're not keeping track of things as granular again as what dependent children you have on your plan month to month all year long for 2015, you could be in some trouble when the end of the year rolls around and you're trying to scramble to figure out how to get the data you need to file these forms.
Absolutely. Thank you so much. This was wonderful information. Obviously, it's going to be incredibly useful to our viewers in terms of getting out ahead of this. Thank you for being here, and thank you to everyone watching. Have a good day.
Okay. Thank you, Sarah.